creating a economy that's inclusive, that's equitable, and that's driven by technology. So managing the economy, the fifth largest economy, the fastest growing economy, managing inflation, and strengthening the economy such that now we can look at the next 10 years with confidence. That's one. Second is working with industry to introduce products leveraging emerging technologies. As I said, creating a society that's inclusive, building trust in the financial system. And the third thing is the Reserve Bank of India is fully aware of the opportunities emerging technologies provide. And Reserve Bank of India is working with industry to leverage these technologies, working with industry to find the right set of regulatory framework such that innovation can be deployed to provide new products and services in the economy. I'm sure that the governor will talk about these in his speech. So without further ado, I invite Sri Shaktikant Das, Governor, Reserve Bank of India, to deliver his address. Thank you.
Good afternoon. I
feel it's a very, very significant development. First of all, it would lead to India's largest entertainment conglomerate, which would be roughly 70,000 crores, above $8 billion. And there would be roughly 558 million viewership, which is one of the most large base anywhere in the world. But I don't have fuller details yet. I am told that there are several voluntary modifications which the parties have pledged to the CCI, which, as I wrote in...
तुम नारी हो, लचीली कमर, कोमल कलाई, नाजुक कंधे.
हम क्या है दुनिया को दिखाएं, अपने अंदर की ताकत जगाएं, ऑप्टिमम न्यूट्रिशन के साथ जीत को हासिल कर जाएं। ऑप्टिमम न्यूट्रिशन, अपने अंदर की ताकत जगाओ।
इस बार मैंने शॉप से डेली एसेंशियल्स का नया ब्रांड इंडिपेंडेंस खरीदा है। पुराने दिन याद आ गए जब पापा चक्की से आटा पिसवा के लाते थे और मम्मी अपने हाथों से गरम गरम रोटियां बना के खिलाया करती थी। इंडिपेंडेंस आटे में है शरबती गेहूं, तभी ये रोटी इतनी मुलायम और स्वादिष्ट बनी है। आज इंडिपेंडेंस स्पेशल खाना बनेगा घर पे। नया इंडिपेंडेंस डेली एसेंशियल्स, कण कण में स्वाद, कण कण में भारत।
It also provides a unique opportunity to align our goals and strategies to ensure that the fintech ecosystem continues to grow dynamically and sustainably. India is now a fast-growing economy economic powerhouse with an increasingly tech-savvy population. India's financial sector has witnessed a remarkable transformation driven, among other factors, by the fintech sector. Publicly available information places the number of fintech founded in India at approximately 11,000. The sector has received investments of about $6 billion in the last 2 years alone. In my address today, I propose to highlight three major aspects. First, setting the priorities for India at 100. Second, technologies for the future. And third, the regulatory architecture for fintechs. I would like to begin by the first part of the first theme which I wish to highlight, that is setting the priorities for India at 100. As you know, India will reach 100 years of its independence in 2047, and that's what I mean when I say India at 100. I would like to begin by quoting Mahatma Gandhi, who had said, "The future depends on what we do in the present." Therefore, as we proceed in our journey towards the centenary of India's independence in 2047, it would be essential to reflect and imagine the future of our financial landscape, its requirements, and the technologies that will shape it. This journey will be marked by dynamic shifts in technology, regulation, geopolitics, and growing societal expectations. The financial sector is experiencing rapid digitalization and innovation. While all of us strive to enhance financial inclusion, optimize digital payments, and harness emerging technologies like blockchain and artificial intelligence, we also confront the inherent unpredictability and interconnectedness of the global financial system. In this environment, developing a mindset that anticipates disruption and embraces change with prudence becomes very, very important. Financial institutions and fintech startups alike must therefore adapt swiftly, leveraging agile strategies and robust frameworks to capitalize the new opportunities while mitigating the connected risks. It's up to the stakeholders in the Indian financial ecosystem, banks, non-banks, fintechs, regulators, and the government to foster innovation with resilience. While the fintech ecosystem is ushering in much needed personalization and contextualization of finance for consumers, the context needs to be broadened to build a financial system that serves the broader society. To achieve these, I wish to propose the following 5 policy priorities for the future of India's financial system. The first policy priority would be digital financial inclusion. As a policy priority, financial inclusion should ensure that everyone has appropriate access to financial services. The Reserve Bank's Financial Inclusion Index, which we launched in 2021 and which measured 53.9 in March 2021, has gone up to 64.2 in March 2024. So from 53.9 in 2021 March, it has gone up to 64.2 to this year's, that is March 2024. As a country, we have succeeded in ensuring banking access to every village within a 5-kilometer radius or a hamlet of 500 households in hilly areas. So far, 530 million Jan Dhan accounts have been opened under a national mission. And incidentally, as I'm speaking to you, the Jan Dhan scheme of the government has completed 10 years since its establishment, and its progress is there before all of us to see. Initially, the apprehension was that all these accounts will be zero balance accounts and there will be no activity, there will be no sort of transactions taking place through such financial accounts. But I think the experience over the last 10 years has completely belied such apprehensions. And today, there are 530 million Jan Dhan accounts, most of it, in the name of women, and many of it in the name of women. And the total savings bank savings in these accounts, I don't recollect the number, but it is a huge amount. And I have to also mention that of the Jan Dhan accounts, 66% of the accounts have been opened in rural and semi-urban areas, and 55% with women beneficiaries. While significant strides have been made in expanding financial inclusion, the evolving landscape demands a shift towards digital financial inclusion, that is promoting secure and digitally enabled financial services and products for the financially excluded and underserved population. Digital financial inclusion has the unique advantages of scalability and cost effectiveness. Accordingly, the next 2 decades will predominantly be about leveraging technology to deliver accessible and tailored financial services that meet diverse needs. In the pursuit of digital financial inclusion, fintechs may strive to offer innovative and accessible financial services, bridging gaps in traditional banking with digital payment solutions, microloans, and affordable insurance. They can enable seamless access to financial services in remote areas through mobile banking apps, digital wallets, and online lending platforms with superior and safe customer experience. The use of data analytics and AI could further enable personalized and efficient financial solutions. I would now like to highlight and speak on priority 2. I said that there are 5 priorities I would like to highlight. Priority 1 was digital financial inclusion. Priority 2 is digital public infrastructure, or DPI. The second key policy priority would be to further deepen digital public infrastructure. DPI, which encompasses frameworks like digital identity, that is Aadhaar, universal fast retail payments, that is UPI, and targeted payment solutions like platform for bill payments, will enhance the efficacy of the financial system in general. They would be key tools to promote interoperability, transparency, and cost effectiveness. New DPIs could address emerging challenges such as frauds, cyber threats, data privacy, and other concerns. They could also support the integration of advanced technologies like blockchain and AI to enhance security and efficiency in financial services. Continuous innovation is crucial in harnessing technological advancements and maintaining a competitive edge in the global financial landscape. Once significant, one significant initiative in this direction is the Reserve Bank's pilot on Unified Lending Interface, that is ULI, earlier known as the Public Tech Platform for Frictionless Credit. ULI aims to enable lending institutions to offer frictionless end-to-end digital credit by leveraging consent-based data and related services. There are about 50 such types of data services on the ULI platform. Apart from banks and NBFCs, we are now focusing on inclusion of other lenders like cooperative credit institutions through the NABARD. A full-scale launch of the ULI will be done in due course. As I said 2 days ago in another event in Bangalore, the new trinity of JAM, UPI, ULI will mark a revolutionary step forward in India's digital public infrastructure journey. Priority 3 that I wish to highlight is consumer protection and cyber security. Ensuring robust consumer protection is crucial for upholding trust in the financial system. As consumers are increasingly relying on digital financial services, their expectations for personalized, efficient, and seamless experience are also growing. alongside traditional risks such as mis-selling and fraud. New manifestations of consumer risks such as data privacy and security breaches have emerged with the advent of new technologies. Leveraging technology for real-time monitoring and ensuring regulatory compliance will be essential to address these challenges effectively. The Digital Personal Data Protection Act 2023, that is DPDP Act 2023, is a cornerstone in India's consumer protection landscape. It marks a significant shift towards safeguarding personal data. This act enshrines the principles of data minimization and purpose limitation to ensure that organizations collect only necessary information and use it solely for specified purposes for the required period of time. It empowers individuals with the right to access, correct, and erase their data, thus giving consumers greater control over their personal information. This act incentivizes businesses to adopt robust data protection measures, which will ultimately enhance trust in the digital transactions. Dark patterns such as misleading buttons, hidden charges, and forced continuity have become big concerns in the digital marketplace. The Guidelines for Prevention and Regulation of Dark Patterns 2023, issued by Government of India, is an important step to protect consumers from unfair application of technology in businesses. These guidelines aim to identify, prohibit, and penalize restrictive and misleading practices so that consumers can make informed choices. On their part, banks and fintech NBFCs are expected to adopt a customer-centric approach, implement robust security measures, offer transparent financial products, and adopt fair lending practices. Algorithmic decisions need to be fair and unbiased and treat customers equitably. Minimizing technology risks requires investing in resilient IT infrastructure and continuous monitoring to protect against cyber threats and technical failures. By embracing these principles, businesses can enhance consumer trust, foster long-term relationships, contribute to a more secure and reliable financial ecosystem, and ensure their own long-term viability. Beyond these steps, cybersecurity emerges as a critical pillar in safeguarding India's digital financial ecosystem from a systemic stability perspective. As financial transactions increasingly migrate online, the threat landscape is expanding exponentially. Investing in state-of-the-art technologies such as AI-driven threat detection, analysis, and mitigation, along with clear focus on improving human resource capabilities, are indeed necessary to bolster resilience of our information systems. Promoting cybersecurity awareness among consumers and employees alike are essential steps towards building a secure digital economy. As a regulator, I have to emphasize these aspects on behalf of the Reserve Bank, while at the same time reiterating our continued commitment to promote innovation. Priority 4 is sustainable finance. Long-term economic stability needs prioritization of sustainable finance, sustainable growth, and environmental preservation. India's commitment to environmental preservation is enshrined in Article 48A of the Constitution of India. From a financial sector perspective, we meaning the Reserve Bank, we have taken steps for ensuring sustainability with recent initiatives like Sovereign Green Bonds Framework of India in 2022, and the Framework for Acceptance of Green Deposits in 2023. These frameworks are expected to play an important role in financing green projects, incentivizing sustainable practices and lowering societal costs of development. Despite their benefits, green bond and green deposit frameworks nonetheless face several challenges. They include scalability, as the market for green bonds needs to expand significantly to attract larger issuances and diverse set of investors. Ensuring authenticity and impact of green projects financed through these frameworks requires robust monitoring and reporting mechanisms. Technology can play a pivotal role in overcoming these challenges. Blockchain technology, for instance, can enhance transparency and traceability in green bond issuances and provide immutable records of project impacts. Artificial intelligence and big data analytics could enable banks and investors to assess environmental risks and opportunities associated with their green investments. Fintech innovations such as digital platforms for trading green bonds and impact measurement tools can streamline processes and attract a broader investor base. Looking ahead over the next 2 decades, fintechs will be instrumental in driving the progress in transition finance, climate finance, and nature-based solutions, strengthening regulatory frameworks, enhancing investor awareness, and fostering public-private partnerships will be very critical. By harnessing the transformative power of technology and promoting innovation in sustainable finance, India can accelerate its transition towards a resilient and low-carbon economy. We have to put our heads together to achieve sustainable growth and environmental stewardship for the future generations. I would now like to focus on priority number 5, that is global integration and cooperation. India has engaged actively in international fora and bilateral agreements to foster economic cooperation with many countries. Going forward, strengthening financial infrastructure, including cross-border payment systems, will be our key focus areas. India, with its tech talent and evolved financial fintech ecosystem, holds the potential to serve as a global hub for digital innovation and fintech startups. Building and strengthening strategic partnerships, reinforcing our commitment to international cooperation, developing institutions of excellence in the areas of technology and innovation across a wide spectrum of areas, including financial services, would give the right impetus for our journey towards 2047. Based on encouraging response we have received from several jurisdictions, we are now focusing on making the UPI and the RuPay truly global. The deployment of UPI-like infrastructure in foreign jurisdictions, facilitating QR code-based payment acceptance through UPI apps at international merchant locations, and interlinking UPI with fast payment systems in other countries for cross-border remittances are on top of our agenda. Notable progress in this direction has already been made with countries like Bhutan, Nepal, Sri Lanka, Singapore, the UAE, Mauritius, Namibia, Peru, France, and a few other countries. These endeavors underscore collaborative efforts for adoption of India's initiatives across the globe. I would like to compliment NPCI and my colleagues in the Reserve Bank for what has been achieved so far. But we must resolve to do more in this national endeavor. And that's a message. We have done a lot, but we have to do more. India's CBDC, which is in pilot stage, is another example of possible international cooperation. We are now utilizing features like programmability to provide credit or government assistance to landless tenant farmers and carbon credits to farmers through CBDC. While we have successfully demonstrated the interoperability of CBDC with retail fast payment systems like the UPI, we continue to gain from our experimentation on offline solutions. As we make progress, we would be happy to cooperate with other nations in their CBDC efforts. So that was the first part, first part of what I said, priorities for India at 100. The second part, which I would like to focus, is technologies for the future. Now, looking towards the future of India's financial landscape, the integration of cutting-edge technologies promises transformative advantages across various facets of our life. Artificial intelligence and machine learning are poised to revolutionize financial services in unprecedented ways. AI algorithms are already being deployed for fraud detection. Machine learning models are increasingly being employed in credit scoring, leveraging predictive analytics to assess creditworthiness and expand access to credit. AI-driven chatbots and virtual assistants are steadily enhancing customer service experience by providing personalized recommendations, resolving queries promptly, and improving overall satisfaction. As AI and ML capabilities continue to evolve, their potential applications in regulatory compliance, investment advisory services, and algorithmic trading are expected to further redefine the financial landscape. Simultaneously, we should also fully understand the risks posed by AI and facilitate calibrated and responsible adoption. Players in the financial sector, central banks, and governments should facilitate development of trustworthy AI, keeping in mind the concerns surrounding data privacy, explainability, accountability, and transparency. What can be a desirable model for governing technologies by AI may perhaps be a key issue for discussion among the experts assembled here and in the next 2 days. Now, the Internet of Things represents, that is IoT, represents another frontier of opportunity for the financial sector. IoT devices embedded with sensors and connectivity capabilities are reshaping the payments ecosystem by enabling seamless transactions through connected devices such as wearables and smart appliances. Further, IoT-driven data analytics offer insurers real-time insights into policyholders' behavior and risk profiles. They can facilitate personalized insurance offerings and dynamic pricing models. IoT-enabled devices in supply chain finance and asset tracking have the capacity to streamline operations, enhance transparency, and mitigate risks. As IoT adoption grows, collaboration between fintech innovators and IoT developers will be crucial to harnessing its full potential. Now let me turn to quantum computing. Quantum computing holds great promise as a game-changing technology with profound implications for cryptography, financial modeling, and risk management. Its potential to perform complex calculations at great speed and scale poses both opportunities and challenges. In cryptography, quantum-resistant algorithms are being developed to safeguard sensitive financial data from quantum-enabled cyber threats. In financial modeling, quantum computing's ability to process vast amounts of data and simulate complex scenarios promises to revolutionize portfolio optimization, trading strategies, and risk assessment. Moreover, quantum computing's potential to solve optimization problems could enhance real-time decision-making processes and improve predictive analytics in risk management. As these future technologies continue to evolve, Their integration into India's financial ecosystem will require strategic investments in research and development, collaboration across sectors, and proactive regulatory frameworks to ensure ethical deployment and mitigation of potential risks. The Reserve Bank is fully conscious of all these issues, and we are giving due attention to these areas. Finally, the third part of and the last part of what I wanted to say focuses on regulatory architecture. Finally, as I said, I will like to touch upon regulatory approach for the fintech sector. Sustainable and orderly development of fintech sector requires an appropriate balance between innovation and prudence. Our endeavor is to carefully craft regulations to achieve this delicate balance while simultaneously ensuring trust, security, accessibility, risk management, and competition. In this context, I would like to mention that several regulatory guidelines have been issued in the recent past by the Reserve Bank after wide-ranging consultations with stakeholders. These include the issuance of the guidelines on digital lending in September 2022, Master Directions on Outsourcing of Information Technology Services in April 2023, and Master Directions on Cyber Resilience and Digital Payment Security Controls for Non-Bank Payment System Operators in July 2024. A preferred approach, this may be of interest to all of you, a preferred approach for achieving balance between innovation and prudent regulation involves self-regulation within the fintech sector. Self-regulatory organizations, that is SROs, comprising industry participants and having a good understanding of the sector's unique challenges and opportunities, would be in a position to give appropriate suggestions to regulators on issues of regulation that are both practical, that is, the suggestions should be that can be practical and effective. So these SROs, when constituted, they are uniquely placed as an interface between the regulator and the fintech sector, because these SROs would understand the requirements and the evolving technologies. They are closer to the ground, and they can sort of consolidate, synthesize, analyze, and give practical, effective, and stable, and what we can say prudent recommendations to the Reserve Bank, which we are always willing to discuss and always willing to engage with all of you. Now, the announcement of a framework for recognition of self-regulatory organizations for fintech by the Reserve Bank, which we did earlier this year, last year in 2023, marks a pivotal step forward in this direction. I think we issued the framework sometime earlier this year in 2024. So this is actually a pivotal step forward in the direction of positioning SROs. It may be recalled that in last year's GFF, in this event, I had announced our desire, that is Reserve Bank's desire, to see at least one fintech sector SRO, self-regulatory organization, taking shape by GFF 2024, that is taking shape by this year's event. I am happy to announce that of the 3 industry bodies, entities who have applied for recognition as SRO, the Reserve Bank has granted recognition to 1 applicant, that is to 1 entity. Of the remaining 2 applications, 1 application has been returned with a provision for resubmission after meeting certain requirements. The 3rd application is under examination. Through regular consultations, feedback mechanisms, and policy dialogues, the SROs would facilitate open communication and enable fintechs to stay informed about regulatory expectations and priorities. Just to illustrate the depth of our engagement with the fintechs over the past 1 year, I would like to mention that officials and teams from various departments of the Reserve Bank have engaged in about 750 interactions bilaterally and held about 50 structured meetings with fintech players over the last 1 year. I reiterate our commitment to fostering a dynamic fintech sector. Let me now try and conclude. The journey towards India at 100 is filled with immense potential and opportunities. The transformative power of fintech innovations, coupled with our commitment to financial inclusion, sustainability, and consumer protection, sets a robust foundation for the future. The seamless integration of emerging technologies will further redefine the financial landscape. Let us embrace this dynamic era with a collective vision and collaborative spirit to ensure that India's financial ecosystem not only meets the aspirations of our people, but also sets a global benchmark for innovation and growth. Thank you very much for your patient hearing. Namaskar.
On your behalf, I want to thank the Governor, Sri Shaktikant Das, for this wonderful presentation. And you can see what I meant when I said, the regulator works with the industry to progress innovation and progress the economy. Thank you, sir, very much for this.
Ladies and gentlemen, on that note, first up, can we have a round of applause? And I request Sri Shaktikanta Das, sir, to please remain on stage. I request you, sir, to remain on stage. And I thank Mr. Gopal Krishnan, sir, for spearheading this important keynote for us, this important initiative for us. And as I request Sri Shaktikanta Das to remain on stage, I also thank Mr. Gopal Krishnan, and I invite him to please join the audience because, ladies and gentlemen, it's now time for the much-awaited product launch by NPCI. So we are truly setting the stage. That's right, ladies and gentlemen, that's right indeed. But on that note, I'd like to also please invite on stage Sri Nandan Nilekani. Can we have a huge round of applause for the co-founder Infosys, former chairman UIDAI, and advisor NPCI. May I please invite Sri Nandan Nilekani to please come on stage, and may I further please invite Sri Ajay Kumar Chaudhary, non-executive chairman NPCI, to please come on stage, sir. We managed to gather the priorities, the significant initiatives, and the frameworks that are truly shaping the future of India's financial landscape, which is why we bring the excitement together and the energy together as we gear up for the much-awaited product launch by NPCI. So first up, may I please request Sri Ajay Kumar Chaudhary to please address the August gathering, and can we keep that round of applause going?
Hey guys, welcome back to the Cloud Computing Week by Simply Learn. Previously on Simply Learn's Cloud Computing, with popular frameworks like Amazon AWS and Microsoft Azure. Today on day 4, as promised, we bring you the Google Cloud Platform. GCP, or the Google's Cloud Platform, is a suite of cloud computing services that runs on the same infrastructure that the Google uses internally for its end user products. If you're in a worry that you missed out the previous concepts that we discussed in this Cloud Computing Week by Simply Learn, don't worry, all those sessions are available on our official YouTube channel. Please feel free to check them out. Now, before getting started with GCP, let me tell you guys that we have daily updates on multiple technologies. If you're a tech geek in a continuous hunt for latest technological trends, then consider getting subscribed to our YouTube channel and don't forget to hit that bell icon to never miss an update from Simply Learn. We will begin this full course video with what GCP is. Then we will look into GCP and its concepts in detail. Then our expert will give you a quick training on Azure services. Then we will see what's the differences between AWS and GCP. Next we'll see what GCP web hosting is. After that, we will be looking into Google Cloud Machine Learning. And finally, we will conclude this video by discussing the Google Cloud Platform Fundamentals Certification Training. So without further ado, let's get started with GCP.
Good morning and good evening, everyone. So welcome to this session on Google Cloud Platform. My name is AJ, and I'm an instructor with Simply Learn and also working as a big data and cloud architect for various clients across globe. In this session, we learn about Google Cloud Platform, wherein we will learn about what is cloud computing, why Google Cloud Platform, what is GCP, that is Google Cloud Platform, Google Cloud Platform domains, about a use case, that is Ferrero use case, and also a quick demo on using services from Google Cloud Platform. So when we talk about Google Cloud Platform, we also need to know what is cloud computing. So cloud computing is the use of hardware and software components to deliver a service to a network. Users can access these files and applications and services provided by a cloud provider from any device that has access to internet. In short, cloud computing is a way where cloud provider provides access to different services such as resources. And when we talk about resources here, we talk about computing, we talk about memory, we talk about processing power, we talk about storage, and we also talk about different services which cloud providers make available for the users. Now, that allows us for automatic software integration, backup and restoring data, unlimited storage capacity, having a reliable use of different services, and having a cost efficient solution. Now, we know that cloud computing's models, there are different service models. So you have platform as a service, you have infrastructure as a service, and you have software as a service. And these are the prominent models which are offered by different cloud providers such as Google Cloud, such as Google, you have Amazon, you have Azure, and also some organizations build their own private clouds using open source OpenStack. Let's focus more on Google Cloud Platform and what it has to offer and how it is gaining popularity in the market with different organizations which would want to work on a cloud platform or which would want to work on an infrastructure which is modernized. So when we talk about cloud computing, this is one of the approach which organizations can take to instantaneously benefit from modernization using different services, different platforms, and also newer technologies for their various requirements such as scalability or dynamic businesses. Before we get into Google Cloud Platform, it is also good to understand where you can find some useful resources about Google Cloud Platform. And here you have a website which is from your Google Cloud. So this is cloudacademy.com/library/Google. And here you can create a free account. Now that would give you just 7 days trial, but that has a lot of videos which talk about your Google Cloud platform and essentials, and it has various certification related videos which you can access. And then after 7 days, after you have tried, you can obviously go for a paid account where you can take detailed learning from here. Now, this is your training library, which shows your different cloud providers such as Amazon, Microsoft Azure, GCP, and then you have various other topics which are specifics to organization. You can obviously look at the pricing, and you can also look at resources, which will give you a good experience in learning from these videos. You can also create a free account, which I will walk you through later. So you can create a free account on cloud.google.com. Now, when I say free account, that basically means it allows you to create an account, and every user who creates an account gets a $300 free credit, which can be used to practice, brush up your skills, and also explore and learn about different Google Cloud products which are offered by Google. Now, coming back to our Google Cloud platform, let's understand why Google Cloud platform. So Google Cloud platform is popular for many reasons. Now, let us see a few of most important reasons why it stands out. When you talk about pricing, pricing is one of the significant factors that make Google Cloud stand out among the other cloud providers. It offers a monthly pricing plan, which is billed according to monthly usage. And when we talk about billing here, the billing can be in hours, it can be in minutes, and it can also be in seconds. There are different options when you talk about your pricing, which can be found from your Google Cloud webpage. Now, pricing could be based on preemptive machines. Pricing could be based on reserved instances or reserved resources. I'll show you the link where you can find more details on pricing part of it. So Google Cloud really has various pricing options which help customers in their different requirements, whether they would go for any of the service models, such as infrastructure as a service, platform as a service, or even software as a service. One more attractive thing about Google Cloud pricing is that it provides committed use discounts. For example, under this scheme, you can purchase a specific amount of virtual CPU cores and memory for up to 57% discount off regular prices if you commit usage for either 1 or 3 years. Now, this is just one option. There are various such options which you can learn about from the Google Cloud's page, and that really suits different customers for their different requirements. Now, when we talk about speed, we don't need to really challenge this aspect when it comes to Google services. So Google provides its Google Cloud and Google App customer speed up to 10 terabytes because of its faster cable system. There are different kind of machines which can be used if you're talking about computation, if you're talking about memory hungry applications, or even storage intensive workloads. All in all, speed is one of the defining characteristics of Google Cloud services. The cable has connections over US West Coast, main cities in Japan, and even major hubs in Asia. This speed enhances performances and leads to customer satisfaction. Now, when we talk about customers, any or every customer would prefer to have low latency, high throughput based services. They would want to use higher speeds to process their data in as less time as possible. Google provides a low latency network infrastructure. In fact, you can say that when you are using Google Cloud services, you are using the services from the same infrastructure which Google uses for its popular services such as Google Search or even YouTube, which is one of the second largest repository which can be accessed for videos. Now, when we talk about big data is data which is very complex, has a lot of other characteristics such as your volume, you have velocity, you have variety, you have veracity, validity, volatility, virality, and so on. So if an organization is working on big data, Google Cloud can be a better choice because Google has many innovative tools for cloud warehousing, for example, such as BigQuery, and even real-time data processing tools such as Dataflow. BigQuery is a data warehouse that allows massive processing of data at high speeds, basically working on your structured data. Google also has launched some new machine learning from artificial intelligence tools. Now, there are various other services which we can use from Google Cloud Platform. But let's understand what is Google Cloud Platform and what are some of the services, even the services which are not listed